Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel. This is one of my personal gold stock portfolios here. It has started recovering since the market bottom here. I'm going to talk about AMD stock today and give you an updated AMD stock analysis. At the time of making this video, AMD stock is down 35% from the most recent peak here. Similar to the Nasdaq 100 index, the entire semiconductor sector, as represented by the iShares semiconductor ETF here, has started recovering recently, but overall is still down 22% from the most recent peak. As an investor, you may want to know, is AMD stock undervalued now, and is AMD one of the best growth stocks for long-term investing? I'm going to answer these questions by talking about these topics. First, AMD's biggest risk going forward. Second, AMD's economic moat and competitive advantage. Third, AMD's long-term growth prospects. Fourth, AMD stock valuation. And fifth, what is my investing strategy going forward? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over 7 figures over time. With your support, we will be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Take a look. Let's start. At the time of making this video, AMD's biggest risk is that the PC market is expected to slow down significantly in the upcoming quarters, at least throughout 2022 and possibly throughout 2023. For example, according to Intel's latest earnings call, Intel expects that the PC total addressable market will decline by about 10% in 2022. Intel's management expects that supply chain issues will continue and expects that many PC makers will reduce their inventory. This is because the demand for PCs, especially the lower-end personal computers, has slowed down a lot in recent quarters. Many PC makers are expecting that they will have lower sales growth in the upcoming quarters. This is why they are reducing their inventory, which will likely affect AMD as well as Intel's client computing business. AMD is Intel's biggest competitor. AMD has been taking a lot of desktop, laptop, workstation, and data center market shares from Intel for many quarters already. Here's one example. In the most recent earnings here, Intel's total revenue was down 17% year over year. Its non-GAAP gross margin was 44.8%, and the company reported an operating loss. In comparison, during the same period, AMD's total revenue was up 70% year over year. Its non-GAAP gross margin was 54%, which is higher than Intel's, and the company reported a positive operating income. Even though PC sales have slowed down in recent quarters, AMD has been growing its revenues by taking client computing and server market shares from Intel. This from the Wall Street Journal. It explains that the demand for personal computers, laptops, and mobile devices will likely slow down going forward, which I believe will impact AMD's revenue growth over the next several quarters. The reset now unfolding follows 2 years of supercharged growth driven by pandemic-era spending on laptops, phones, cars, and appliances that strained the industry's capacity, leading to a block shortage. Many electronics that were hard to obtain a year ago are now in fierce supply as inflation concerns and a shaky economic outlook weigh on consumers. We're seeing some areas of the market beginning to rebalance supply and demand, including end markets such as low-end handsets, PCs, and in general, the lower end of consumer electronics market. Chip makers most directly exposed to consumers have been the hardest hit. Intel pinned its disappointing results in part on weakness in PC sales. Qualcomm cut its phone shipment forecast for this year in July and issued a muted sales outlook. PC shipments are expected to fall by 9.5% this year, according to Gartner. This from Barron's explains that the demand for semiconductor chips will be the biggest problem going forward, not the supply side. The problem is the chip industry may now be facing challenges on the demand side, not the supply side. Demand for two of the industry's key markets, computers and mobile phones, seems to be deteriorating rapidly amid the slowing global economy, and according to Citi Research, PC and smartphone products account for about 50% of all chip demand. Here's the part that explains why most semiconductor stocks are down more than 20% from their most recent peaks. Unfortunately for semiconductor companies, this may be the beginning of longer downturn without any turnaround for the immediate future. Many consumers pull forward their spending on computer electronics, laptops, smartphones, and other technology products when they were stuck at home during the pandemic. Most of these items don't need to be upgraded or replaced for years, which could make for sluggish sales for the chip industry for some time to come. I believe AMD's second biggest risk is that the oversupply of current-gen GPUs is impacting both AMD and Nvidia's gaming revenue. For example, if you look at AMD's latest financials here, you can see AMD has 4 major business segments: data center business that sells EPYC server chips and data center AMD Instinct GPUs, client computing business that sells Ryzen processors for notebook and personal computers, gaming business that sells discrete graphics processing units GPUs and semi-custom chips for PlayStation and Xbox game consoles, and embedded business that sells field programmable gate arrays FPGA chips and adaptive SoCs from the recently acquired company Synix. If you look at these financials here, you can see all of AMD's business segments grew in the most recent quarter here, even when the entire PC market is expected to slow down. In the most recent earnings here, AMD's gaming business revenue was up 32% year over year. According to management, the 32% year over year revenue growth was mainly driven by semi-custom chips sold for PlayStation and Xbox game consoles, and the gaming revenue growth was impacted by the decline in GPU sales. At the time of making this video, there is an excess inventory of current-gen GPUs because of the recent crash in cryptocurrencies. Many crypto miners are forced to sell their AMD and Nvidia GPUs at large discounts below their MSRP prices because they can no longer make profits from mining cryptos. AMD, Nvidia, retailers, scalpers, and many gamers are selling their GPUs at large discounts because they want to get rid of their GPUs before the next-gen RDNA 3 and Ada Lovelace GPUs are out by year-end and early next year. This is why most GPU prices, especially high-end GPUs from AMD and Nvidia, have dropped a lot in recent months. In the short term, the biggest risk for AMD's gaming business is this: an oversupply of GPUs always leads to lower GPU prices, which leads to lower GPU revenues for AMD. In my opinion, I believe the demand for AMD's next-gen RDNA 3 GPUs will likely be impacted in the upcoming months as long as there's still an oversupply of current-gen GPUs. And if the US economy heads into a hard landing recession, many computer gamers will want to delay buying AMD's next-gen discrete GPUs. There are other macro risks that are affecting all the semiconductor companies, including AMD. These macro risks include high inflation, higher commodity prices, higher chip component and shipping costs, ongoing supply chain issues, chip shortage, high labor costs, lower PC demand, especially the lower-end PCs, expected slowdown in the semiconductor industry, the war in Ukraine, COVID lockdowns in China, and the ongoing geopolitical tension between China and Taiwan. Here's another important part of AMD's business. Unlike Intel, which owns its foundries, AMD does not own its foundries. AMD is mainly a chip designer. AMD outsources chip making to TSMC to manufacture all of AMD's most leading-edge chips such as Ryzen processors, EPYC data center CPUs, Instinct data center GPUs, and RDNA discrete GPUs. If China invades Taiwan, it will cause a huge disruption in the global supply chain as well as the entire semiconductor industry. This is because TSMC is the largest contract chip maker in the world. Many tech companies rely on TSMC to make their chips. For example, TSMC makes the most leading-edge chips for Apple, MediaTek, AMD, Qualcomm, Broadcom, Nvidia, and even Intel. According to this article here, you can see TSMC owns more than 50% of the global chipmaking market. Samsung is the second largest chipmaker in the world. This is only my opinion. I believe the chance of China invading Taiwan will be minimal because the US will not want China to disrupt the global supply chain, disrupt the entire semiconductor industry, and achieve chip sovereignty. TSMC has the most leading-edge chip manufacturing technologies. There are too many companies, including AMD, that rely on TSMC to make their most leading-edge chips. According to Morningstar, AMD has a narrow economic moat. This is from Morningstar. We believe AMD possesses a narrow economic moat, consistent with other major fabless semiconductor peers. We think AMD benefits from intangible assets related to its x86 instruction set architecture license and chip design expertise. AMD operates in the x86-based duopoly with Intel that dominates the PC and server markets, and also serves as a major barrier to entry for other chip makers to encroach upon AMD and Intel's focus areas. In my opinion, I believe AMD has a medium economic moat instead of a narrow economic moat. For example, the x86 CPU market is dominated by two major players, Intel and AMD. In recent years, AMD's Ryzen processors have become much more competitive and arguably more energy efficient than Intel's processors because of AMD's chip designs and TSMC's node technologies. According to this article here, you can see AMD's market shares in mobile computers, desktop computers, servers, and overall x86 market have been growing consistently almost every quarter since 2016. This means Intel has been losing a lot of x86 market shares to AMD in all business segments. For example, at the time of making this video, AMD's server market share is at 22.7%, Intel's server market share is at 69.5%, and ARM server market share is at 7.1%. You can see Intel has been losing server market shares to AMD and ARM for many quarters already. One of the main reasons is that AMD uses TSMC to make its most advanced chips. TSMC has the most advanced chip manufacturing technologies in the world. Based on what I know, TSMC is at least one generation ahead of Intel in process node technologies and much more ahead of Intel in mass manufacturing of chips. This is why all the major companies such as Apple, MediaTek, Qualcomm, Broadcom, Nvidia, and even Intel rely on TSMC to make their leading-edge chips. In the data center market, AMD's EPYC CPUs are much more competitive than Intel's current server CPUs. This is why AMD has been gaining more server market shares from Intel for many quarters already. In the discrete GPU market, Nvidia GPUs are much more competitive than AMD's GPUs, especially in real-time ray tracing technology and deep learning supersampling DLSS technology. Most computer gamers buy Nvidia GPUs. According to this article here, you can see Nvidia had a market share of 78%. AMD had a market share of 17%, and Intel had a market share of 4% in the discrete GPU market. When it comes to investing, we have to be forward-looking. So let's talk about AMD's long-term business prospects. Historically, if you look at these financials here, you can see AMD's revenue, gross margin, and non-GAAP earnings per share have been growing consistently for many quarters already. According to Seeking Alpha, AMD's revenue grew at a compound annual growth rate CAGR of 54% in the past 3 years and a CAGR of 35% in the past 5 years. This consistent growth is mainly because AMD has been releasing outstanding products almost every year and outsourcing to TSMC to make the most leading-edge chips. Going forward, I believe AMD's revenue growth will not be as high as before, mainly because PC sales are expected to slow down in the upcoming quarters, at least throughout 2022 and possibly 2023. I talked about this earlier. There's an excess inventory of GPUs in the market now. This means AMD's discrete GPU sales will likely decline in the upcoming quarters throughout 2022 and possibly throughout 2023 until there's no more oversupply of GPUs in the market. As long as crypto prices remain this low, I believe it will take the market many months to clear out the existing GPU inventory. The oversupply of GPUs will likely impact the sales of AMD's next-gen RDNA 3 GPUs that will be out by year-end 2022 and 2023. Here's the positive side of AMD's gaming business. AMD makes the semi-custom chips for PlayStation 5 and Xbox Series X game consoles. I believe this is a huge competitive advantage for AMD over Nvidia in the gaming business because game console sales are much more stable than discrete GPU sales. This is why AMD's overall gaming revenue still grew 32% year over year in the most recent quarter, even though AMD's discrete GPU sales were down. This from AMD's latest earnings call. It explains that AMD's biggest growth opportunity will be its data center business going forward. Looking ahead, customer pull for our next-gen 5nm Genoa server CPU is very strong. We're on the ramp production of Genoa as the industry's highest performance general-purpose server CPU later this year, positioning our data center business for continued growth and share gains. We have taken a more conservative outlook on the PC business. So a quarter ago, we have thought that the PC business would be down. Let's call it high single digits percentage. And our current view of the PC business is that it will be down, let's call it mid-teens percentage. And that's contemplated into our third quarter guidance. And then as we go into the fourth quarter, what we see is again, the sequential growth, they will be led by the data center as well as our embedded business with the same view of the PC business. Even if PC sales and the PC total addressable market are expected to decrease this year and possibly next year, I believe AMD's overall revenue will continue to grow at lower rates than before by taking more market shares from Intel in the server market and the client computing market. Here's one example. Intel recently announced that they would delay their next-gen Sapphire Rapids data center CPU to Q1 2023 because they found 500 bugs that need to be fixed first. Intel has delayed their Sapphire Rapids data center CPU several times already. In comparison, AMD will be releasing their next-gen Genoa server CPU later this year. This means AMD will likely gain more server market shares from Intel in the upcoming months because Intel is delaying its next-gen Sapphire Rapids data center processor again. Similar to Nvidia, I believe AMD's data center business will eventually become its biggest revenue driver for AMD going forward. Also, AMD's data center business is much more resilient to market downturns than its client computing and gaming businesses. In terms of guidance, AMD said this: for the full year 2022, AMD continues to expect revenue to be approximately $26.3 billion plus or minus $300 million, an increase of approximately 60% over 2021, led by the growth in the data center and embedded segments. AMD continues to expect non-GAAP gross margin to be approximately 54% for 2022. Since PC sales are expected to drop a lot over the next several quarters, and since there's an oversupply of GPUs, we should expect AMD to have lower revenue growth rates going forward, at least over the next several quarters. This is from Seeking Alpha. You can see AMD's revenue is expected to grow at a compound annual growth rate CAGR of 24% over the next several years, and its earnings per share are expected to grow at a CAGR of 24% over the next 3 to 5 years. Personally, I believe these are reasonable growth rates for AMD over the next 5 years. I want to show you how to calculate AMD stock's intrinsic value here, so you will know when AMD stock is overvalued, fairly valued, or undervalued. If you want this calculator, you can download it in my Patreon blog in the video description. These are the key assumptions in this calculator. First, I define AMD's intrinsic value as its future free cash flows discounted to the present day. The discount rate is 9%. If you want to be more conservative, you can use a higher discount rate here. AMD's most recent 12 months of free cash flow is $3.33 billion. Based on the biggest risk and the long-term business prospects I talked about earlier, I expect AMD's free cash flow will grow at a compound annual growth rate CAGR between 20% and 30% over the next 5 years. Let's go over these 3 case scenarios here: worst case, normal case, and best case scenarios. Under the worst case scenario, we are using a compound annual growth rate CAGR of 20% over the next 5 years. If we forecast AMD's free cash flow for the next 5 years and discount the free cash flow to the present day, AMD's intrinsic value should be around $126 billion for the entire company, or $77 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're using a compound annual growth rate CAGR of 25% over the next 5 years. Then AMD's intrinsic value should be around $155 billion for the entire company, or $95 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're using a compound annual growth rate CAGR of 30% over the next 5 years. Then AMD's intrinsic value should be around $187 billion for the entire company, or $115 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, AMD's intrinsic value should be around $95 per share. This means I believe AMD stock is slightly overvalued at the time of making this video. In comparison, Morningstar has given AMD a much higher fair value of $130 per share. So what is my strategy going forward? Personally, I already have AMD stock in my gold stock portfolio here. This is one of my personal portfolios. It's down slightly. I'm not worried about it at all because I'm investing in AMD's business for the long term. I will likely buy more AMD shares if the stock becomes undervalued again. This is my opinion. Even if PC sales are expected to slow down a lot in the upcoming quarters, I believe AMD will still be able to grow its overall revenue by taking more x86 market shares from Intel in the server market and the client computing market. In my opinion, I believe AMD's management is doing a much better job executing its product roadmap than Intel's management. In the long run, I expect AMD's sales and operating income will eventually become as large as Nvidia's. Now, all these are only my opinions and my analysis based on my research. They are not financial wise. There are always risks associated with investing. It's important to always invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.